September 2008. Somewhere in Washington, the U.S. Treasury Secretary, a man who once ran Wall Street's most powerful bank, gets down on one knee and begs the Speaker of Congress not to let the system die, not metaphorically, literally on one knee, because he knows what almost nobody outside that room knows. The world's money machine is hours from stopping. This is the story of 2008, how it was built, how it broke, and who paid. It started with the most American promise of all, a house for everyone. Rates were low, prices only went up, everyone said so, and lenders stopped asking questions. Literally, they wrote loans nicknamed Ninja. No income, no job, no assets. Why would a bank hand $500,000 to someone who couldn't repay it? Because the bank wasn't keeping the loan, it was selling it. And that little detail is where the end of the world begins. On Wall Street, those shaky loans went into a machine called securitization. Bundle 1,000 mortgages, slice the bundle into layers, and here's the magic trick. The rating agencies stamped the top slices AAA, as safe as U.S. government debt. Except they weren't. It was financial alchemy, lead going in, gold coming out, and everyone collecting fees agreed not to look too closely. By 2007, there were trillions of dollars of it, sitting inside pension funds, insurance giants, and banks on every continent. The fuse was global before anyone smelled smoke. In 2006, house prices did the one thing the model said they couldn't. They fell, everywhere at once. Homeowners walked away. The AAA slices started rotting from the bottom up. In March 2008, the investment bank Bear Stearns, to 85 years old, died in a weekend. The market shrugged. Someone rescued it. That shrug was the most expensive mistake of the decade because it taught everyone that someone always would. September 12, 2008. Lehman Brothers minus 158 years old, 25,000 employees, has 72 hours to live. Over one frantic weekend, the government tries to arrange a marriage. Barclays walks. Bank of America chooses Merrill Lynch instead. And at 1:45 on Monday morning, Lehman files the largest bankruptcy in American history. The lesson of Bear Stearns reverses in a single night. No one is coming. Now every bank looks at every other bank and asks the fatal question, are you next? Here's the part they don't teach. The real emergency wasn't the stock market, it was the plumbing. Banks lend to each other every single night. That's the bloodstream of the system. After Lehman, it froze. Money market funds broke the buck. Companies like General Electric struggled to borrow for payroll. The Treasury Secretary was told that without action, ATMs could stop within days. Congress bumped once. The Dow fell 777 points in an afternoon, then signed the largest bailout in history, $700 billion, to restart a heartbeat. Who paid? Not the architects. No senior Wall Street executive went to prison. The bill went to taxpayers, savers, and a generation locked out of the housing ladder. And the warning sign, 2008, leaves us as the oldest one. When an asset can only go up, the fall has already been scheduled. Which brings us to tomorrow, because the very first time humanity learned that lesson, the asset wasn't a house, it was a flower. A new fortune falls here every day. Subscribe.